In this video, I'm going to make you a list of accounts. At the top of the page here, I have a balance sheet equation, which goes like this. The assets are equal to the liabilities plus the owner's equity. This formula must always be true. So if the assets go up, then either a liability goes up or an owner's equity account goes up. It's also possible for an asset to go up and another asset to go down. But the fundamental idea is this equation must always be true. Let's start with the assets. First we have the current assets. These are things like cash. Cash is money. Cash could be cash on hand, could be a checking account. Cash always goes first. It's the most important asset because with that asset you can acquire any of the other assets. Then we have accounts receivable. Accounts receivable represents amounts that are owed to me. If it's my business and I have an account receivable, somebody owes me money. The thing we want to think about is that the accounts receivable, when you collect them, will turn into cash. We also have an account called inventory. This represents products that you have to sell. You could think of a grocery store or a tire store. The groceries or the tires are inventory. When you sell them, you earn revenue. Next is supplies. Supplies are items that we use up in the production of revenue. I always think of a lawyer who has reams and reams of paper so that when a lawsuit is filed, those supplies are used up in the production of revenue. Prepaid insurance represents insurance. Perhaps it's liability insurance in case your customer slips and falls, breaks a leg. It is very common for a business to carry insurance for unexpected incidents that happen. This group is called the current assets, and there's a definition. They get used up or converted to cash. And that's within 1 year time. Under property, plant, and equipment, property is land. Piece of land is a vacant lot, another way to say it. It's an asset because you could convert it into a parking lot or put a building on it. Buildings represent an asset. Maybe you have a store that you purchased to sell your products, or an office building. Very common type of asset for business to own. Equipment would be things like a cash register, a computer, a drill, or what else? Perhaps something that you put your products on, like furniture, like shelving, for example. And then finally, way at the bottom of the balance sheet, we have something called intangible assets. These are usually rights, a right to do something. So if you have a patent, a scientific idea that you can use to earn revenue, you can have that idea patented. Something similar, a copyright, a right to an artistic creation. This could be a book. So if you wrote a textbook, you could get a copyright on that textbook, and that would be an asset. You would own it, and you would be able to earn revenue from that copyright. All right, over in the liabilities, we have two types of liabilities. We have current liabilities. I'm just going to give you two of those right now. One is accounts payable. These are amounts that we owe. So a liability is an amount of money that we owe. And there's two common types here in Chapter 1. Accounts payable. Maybe you buy some supplies on account, and you are not going to pay for them immediately. You would have an account payable that you would pay off later. Note payable would be a similar type of thing where you go to a bank and get a bank loan and you sign a note payable. You're going to have to pay that off in the future. All right, and then the third category, owner's equity. I'm just going to give you the titles at this point, and then I will explain them a little more carefully later. But owner's equity has four parts to it. You have the owner's capital. That's usually what the owner invested. You have the drawing. This is where the owner takes money out of the business. And then you have revenues and expenses. The revenue is what you earn from providing a service or a product. An expense represents a cost you incur when you're earning the revenue. So a couple of examples of expenses would be rent expense, advertising expense, and salaries expense. You notice that each of those expenses ends with the word expense. All right, that's a quick list of assets, liabilities, and owner's equity. And in our next film, we're going to manipulate these to show how transactions are analyzed. For now, I'm just going to write you a little note here. Memorize these assets, liabilities, and owner's equity accounts. And remember that the revenues and the expenses are part of owner's equity, a very important idea. All right, thanks for watching. See you on the next one.